Good afternoon, everyone. It's again. This time, instead of unusual option activity, we're going to go over trend lines. So I think trend lines is an extremely unappreciated way to play, but you also have to combine it with a MACD. And a number of other things. So I'll go over those just so you know. So the first thing to understand is that so many on internet, remember, I've been doing this a long time, and the same things that worked 40 years ago still work. It's not like a dinosaur and they don't work. So just keep that in mind. So the first thing to know is the basics of the trend line. And the trend line, number one, I don't draw a trend line that's too steep. I watch more people try to draw it this way. The other thing about a trend line, you don't draw it on the top. You draw it connecting the bottoms. So now on the way up like this, yeah, that's different. I'm talking about when it's riding up that way. But the key in here is number one, the more points of contact, the more important. So if you have and the slope. So if you have, let's say, 1 point of contact, so I see more people try to draw that trend line. Well, that's 2. That's not enough. You got to have at least 3 points of contact. The next is definitely the more points of contact, the more important. And the other is the slope. So on the way up, yeah, like this, VIR, we were long. I got out too early. Yeah, the trend line. Here, there you go. More points of contact. Now, don't think it's that easy because it looked great and then it got back under it. So I got out of some here and then stayed in some. But the key is the horizontal amount. And the other thing about trend lines a lot of people miss is you want it in a longer term trend. So if you're seeing this, so we'll show it yesterday. To me, a longer term trend a lot of times is an hourly when we're day trading. So I'll show you what we're talking about. So longer term trend. So and like I said, day trading is a lot different than longer term trading. So we're going to take 4 time frames. And what we're going to do is show you the NASDAQ. So the NASDAQ definitely was in an uptrend. We know all that. Look at all these times you could connect the lines. But we're talking about yesterday. And this was posted on StockTwits as it happened. So all we were doing was this. We were showing this chart right here. See those trend lines? We can do it this way. And all we were doing is showing that. So now when you're on the way down, I combine a number of things. Number one, I'm happy to share this, just this layout. So all this is 4 time frames. So this has the MACD, it has the ATR trailing stop and a 20 moving average. When I go shorter term, I did 20 and ATR trailing stop as well. So what I wanted to show you in here, and let me share this. Can't share it in the other, I can only share this in the essentials room. No, VIR, we were long VIR, not short it. We sold our options on the way up. So we did not, so we were buying VIR. I just didn't stay in long enough. But no, we bought VIR. In fact, I had an 8 lot of calls that went up about $1. So, I mean, just keep that in mind. So this is your 4 time frame when you're day trading. I don't use an oscillator for a 1 minute. I'll use these. And so let me show you what we're talking about. Number one, I called this out yesterday, the trend line. So if you can have a tight trend line in a bigger trend line, that's a big deal. So if it breaks one trend line, it breaks the bigger. So that's number one. When you went back to this, and like I said, this was posted yesterday. So in fact, I can just show you on StockTwits. Let me find it. There. I do a lot of posts there. So, but that's how you made money in the afternoon. The trend line, the more horizontal, the more important. If I'm playing on the downside, I like to combine that ATR trailing stop. So the more times it touches, the more important. Now you might say, how about here? Why wasn't that bearish? Because it was still in an uptrend. When I'm trading a 5-minute or a 15-minute, you're going to see that ATR trailing stop comes in handy. It helps you determine if it's an uptrend or a downtrend. So just keep that in mind in there. So there's your trend line. So you might say, wasn't that a trend line? Well, believe it or not, we showed that one too. So just keep in mind that when I want to play a short idea, you want that. You want that tight trend line. This is actually, we showed this one as well. So you have all these points of contact. And this is the hardest thing to grasp. I watch too many sites that short on the way down or buy on the way down or short on the way up. So you're going to see like VIR worked great. I didn't stay in long enough, but I still made what I wanted to make. I was playing for the 11 area in there. But you're going to see in here that even though this was theoretically resistance, if you go way back, it was a better sale at that area on the way down because it broke an ATR trailing stop and it broke a trend line. You can see, where are you more comfortable shorting this? So, and I'm going to take off the little things here. Yeah. Where are you more comfortable shorting this? On the way up with a bull flag or on the way down with a bear flag? On the way down after breaking an ATR trailing stop or on the way up when you don't know when it's going to stop? So that's where we shorted it. Now, what you're going to see, whether you play long or short, like I said, we have a lot of longs, we have a lot of shorts. So it's both sides of the equation. But just keep in mind that another trend line, like I said, the more horizontal, the more significant, up or down. Like I said, do not just ride off thinking all we do is short. I'd say our longs is probably like 80% of the time. But if it's a bearish market, sure, our shorts will be like a lot more than that. But that's what you're looking for. So that's one side of the equation. But there are other sides. So, and let me show you what they are. When I do trend lines, I'm also combining an oscillator. This is why yesterday we did not trust the trend line break until the oscillator wasn't oversold. You've still been in a big old uptrend. So I had to see how the MACD was worked off. A trend line that might be bearish is less likely to work if this is oversold. So that's why we talk all the time about how it works off the oversold condition. As you see, it worked off the oversold here by going to the 0 line, and this retained that bearish structure. So that's why we were bearish. So at least you know the rationale on there. So now let's go to other ones. Now, I don't have a good trend line drawer. Like when I go into FinViz, and that's one way I've done it, is I'll look at this. Now, I showed you screeners of other stuff, but there's other kinds of things, and let me show you. So we can go into here into screener and take all the big stocks. Let's say average volume over 500,000. You don't have to do it that way. When you have the Russell lagging, but the Russell to me is going to be the leader coming up, I'll trade cheaper stocks. So you can even do it this way. you can just take 1 to 20. Average volume over 300,000. It's going to be a ton of stocks. Ton of stocks. So optionable and shortable is the way I like going. All right. The next thing, though, so you have cheaper stocks, average volume, stocks only, but I want them optionable and shortable. Then you're going to go to technical. And believe it or not, let's see where it is. I always get this messed up. Pattern. There. Trendline support, trendline strong. I don't know what that means. Trendline resistance, all of this. Horizontal. That's my favorite. But it's not perfect, whether it's Thinkorswim or FinViz. It's not perfect. But there you go. There's some of your trend lines. Yeah, there you go. That's the dumbest thing I've ever seen. Just keep that in mind. That's a nice one. I know nothing of this stock. So that might be a good one. So we're just talking about where you can do a lot of points of contact. So BGS. Now, the problem with this is when I see this, and you might say, well, I want to buy it. Number one, that's pretty much of a sharp slope. But then I'll find a shorter trend line. So if it breaks that, it might break the other one. And I'll show you a perfect example of this. But that's one way to do it. Put in those trend line thingies like that. That's one way. But I'll show you where it really worked. Really, really, really worked. Go into Tesla. So everybody loves Tesla. Everybody loves it on the way down. I don't know why. This is where you buy Tesla. Do you buy it on the way down? Absolutely not. It's a good way to lose your account. Remember, most people don't have unlimited funds. When is the perfect? Well, let's do it this way. I'm going to show you a 50 moving average and a 20. But tell me, and I'm going to take off actually every moving average. Okay. Where is the best bullish trend line within this? Let's just do a question and answer here. So where is the best trend line here? Now, I know Chart Patterns Mastery knows it, but where is by far the best trend line? And just to let you know that when you're like on, when you're in the restream, don't go and promote somebody else from blockchain and all that stuff. So you'll be kicked out. So just to let you know, you will be kicked out. So I'm not going to deal with that kind of stuff. So just to let you know, will not deal with that stuff. So it drives me nuts on YouTube when that happens. Okay, getting back to it in here. Where is the trend line? Darn right. Look at this. Where, not on the downside. I'm talking about bullish trend line. Right there. Look at that. Look at all those points of contact. And then you got a double bullish. And what's that? You got a bull flag over the bullish trend line. So if that broke up, this was going to break up. So you're exactly right, that 180. So you had all these points of contact. All those points of contact. And not, I'm not going to say it's horizontal, but it's not bad. That's the problem with here. You can't do a trend line here. So many people tried to do it. So usually if you get a rally, it's a false one. Trend line here, that's a false one. Trend line here, there's a beauty. right here. Here, well, not there, but if you want to draw it like that, great. I like more horizontal. The problem is it takes a lot of patience. Keep in mind when it was 180, most people are like, oh, I missed it. So, but that's what resistance is all about. All the people that bought on the way down are thrilled to come out ahead or come out even. That's what resistance is all about, the bag holders. That's what you're looking for. So whether it's a daily chart, whether it's a 5-minute, that's the kind of stuff I'm looking for. Do you see it in Tesla right now? Not yet. Could it go up later? Well, guess what? No matter how bad it looks, it's actually trying to develop a trend line to the upside. Doesn't mean it's going up, but I'm just telling you, that's what I'm watching. So I hope that helps. So, like I said, this looked terrible. It's a better buy up here. At least it has some semblance of a trend line. Like I said, I shared my charts. I have 4 time frames I look at. So that's what I shared earlier. I use an hourly, a 15, a 5, and a 1. So that's why I show that, and that's why up there I have the share link. So I use an hourly, 15, 5, and 1. That's what I use. If something just has earnings, I'll use a tick chart instead. So just keep that in mind. So if something's going down, you remember there's free commission. So, just keep that in mind, number one. Number two, like VIR, when it looked bad, you can always get out of half. I can't stress enough on some of my family friends, they do some trade, and I'm like, you're up a lot. Why don't you get out of half? Like here. Down here, why didn't I get out of all of it when it had that false sell-off? Because overall, it looked okay. I was close. I was close to getting out. So the key is usually a 1 minute, I'm not going to get myself in or out. If it's a Tesla, sure you can. But because the commissions are free, look at all that waffling around. Usually I'll use an ATR trailing stop. So if I'm trading Tesla on the long side and it's under everything, especially a 15-minute, well, let's say a 5. Let's say you're long Tesla here. Well, you got to get out. And then you don't look back until it forms a defined pattern. So just keep that in mind. So if everything is bullish, so we can take a Tesla back here. But the 1 minute cross something, don't trust the 1 minute as much unless these are close to breaking down. Now, if you have a good profit, like here, let's say you have a good profit in here. You could go to a 1 minute to get out of some. Once it gets here, you got to be out of all of it. I mean, that's the way it looks to me. So definitely, like now, do you buy Tesla now? Well, the problem with Tesla, it is forming a trend line on a 1 minute. On all these frames, it's under everything. But if you are buying it based on a 1 minute, you better get yourself out based on a 1 minute. So that's all I mean. So now, if you bought Tesla, you probably have to be out down here, 411. But if it gets back over it, you get back in. Commissions are free. The problem is that now it's in a downtrend. Back here when it was in an uptrend. Let's say here. Well, none of this has been that healthy. Let's say back here. So, no, the problem with a Tesla, if you base it on an hourly, it can move 10 points before it crosses anything. But it's definitely determining the uptrend. There's your uptrend. Then I'm not going to get myself stopped out on a 1 minute. I'll use a 5 minute. So if you're in right here, there's no reason to get out yet. So is there a reason? So that's how I look at it. ES, like I said, when I'm watching this, you're going to get choppiness, in this type of market. But right now, why would I get out if it's in an uptrend? Also, you look at the stocks, and that's why I show a lot of stocks. Because all the stocks I'm watching, whether it's Caterpillar, Deere, JP Morgan, are all going up. So why should these go? Why should I get out? I'm not shorting the ES. Let's put it that way. If I have an ES on, it's just as a hedge. So just keep that in mind. So, but here, when I see this, the way I trade, if I see that, I'm not getting out on a 1-minute chart. I'm not getting out. And like I said, the whole key is if you initiate here, you don't get out until there's some stimuli that tells you to get out. If you want to get out on a 5-minute chart, that's fine if you don't want overnight risk. But when you see this kind of move up right there, if you got out here, but then it formed a trend line, got above it, you just get back in. These are massive moves. You don't have to hit, you're going to get stopped occasionally. Or you just stay in versus the low. But to me, you just stay in because the trend was up. If it breaks up on an hourly, then I'm going to use a 15-minute as my stop. If it breaks up on a 15, I'll use a 5-minute as a stop. That's the way I do it. Like now, there's no reason to even think of shorting the ES. If you don't want to buy because the bonds are down, that's fine, but there's just no reason to get out. Now, there are a number of other things, and one of them is if the ES goes up too fast and gets too far away from things, then you got to have a shorter term time frame. So if the ES on a 5-minute gets this far from a lot of moving averages or the trend line, if it gets detached from the base, you better put in a shorter term stop. That's the way I look at it. Stop doesn't mean to get out. So, but trend lines, the more lines you can draw, the better. The more horizontal. So Apple trying to form it too. But I'll show you Apple the opposite way. So Apple looked great this morning. Looked like it was going crazy on the upside, and it went straight down. We played this bull flag, though. See that tight pattern? We played it. The problem is you had to get out of Dodge the second it stopped looking good. And the reason is because on an hourly, it's still in a downtrend. So when we initiated on a 5, you better take a 1 time frame less to get yourself out, which would be that little ATR trailing stop. So you initiate on the 5 if you're playing ultra short term, and you get yourself out based on 1 time frame lower. So keep that in mind. So the 1 hour, yeah, you could do it, but there's a lot of, it's not just a mechanical. If the 1 hour you bought, like now, and you have all these stocks continue to go up, then, you get out of half. That's the whole thing about buying twos. You get out of one when it's so detached from trend lines. At least that's how I do it. So definitely it's also position management. So I just can't stress enough how many I see stay in everything instead of getting out of half. So definitely if you have 2 and you're this far from the moving averages, you get out of 1. If it goes to here, you're thrilled you get out of 1. See how it's coming back to revert. So that's what I'm watching. So what else are you watching? A lot of ES stocks. If the ES stocks are starting to go down, then, definitely you got to watch every tick. But it's all about position management. So if you do an hourly on the ES, like I said, this is about trend lines, though. It's not really about stops and all that. But when you see the hourly and you see this so far from breakouts, you're going to have to go to a shorter term time frame to time your exit. You can try to stay in longer, no doubt. But just keep in mind that if you're long here on a 5-minute and you stop yourself, let's say at a moving average, you might not make a dime. When on the other hand, if you timed it here, 61.30, if you get out of the ATR trailing stop, you're making 5 points. So you go to one time frame less. On the hourly, it's overbought now. So now when it's overbought, but the 15 minutes still looks okay, I still have to go to a shorter term, probably a 1 minute. And the reason is you're too extended. So when you're that extended, I have to go to a shorter term time frame. And keep in mind that if you get out of something and all of a sudden it goes to the let's say moving average or trend line and forms a new one, you just get back in. I mean, that's the whole thing about actively trading. So if you get in here and then you get stopped here and then it draws another trend line, you just get back in. As long as conditions are the same. I mean, if Caterpillar, all those were going crazy on the downside, you don't get back in. Cat, Deere, Home Depot, everything was going up. So, that's one. If they were going down when the ES was going up, that's different. Look right now. If you went and initiated on a 5, the second it got under this, you're out. There. You're out. You made 6 points. So, or you get out of half and then you go back to your original initiation and stop yourself on the rest. So that way you make 6 points on half. If you get stopped down here, you're thrilled you made 6 points. On the other hand, maybe it goes up 50. So at least that's how I try to do it. So now what do you do with the markets? Well, the ES is getting overbought. On a daily, it's getting overbought. On an hourly, it's getting overbought. The Russell's not participating, but it still doesn't look bad. But you're getting overbought. So what do? I would have gotten out of half right here. Right there. So I went to a shorter time frame. I initiated here, went to a shorter time frame. That's how I do it. So I hope that makes sense. Thanks for being with me. And I would watch these trend lines.